Alright, welcome back to this week's breakout watch list from October 31st to November 4th. In this video, I'll be covering the top 10 stock setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or strong volume patterns that lead to uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. And finally, if you're coming here for a specific setup, there's going to be timestamps in the comment section below so you can get to exactly where you need. Here are the 10 stocks that we'll be covering today. There's a lot of charts to go over, so let's get to it. The first stock that we'll cover is CALX. It's in computer networking, which right now is the 11th strongest group out of 197 in the market. So we got an A+ group strength rating, A- accumulation distribution. So the volume pattern is exactly what we're looking for. 98 overall composite rating with a 98 individual relative strength rating, checking a lot of the boxes that we look for. This already had earnings last week where the stock rose 18.3% on 250% the average daily volume. We closed in the 84th percentile, so very, very high in the daily range and above $70. This did have negative earnings per share growth, but sales were up 37% and after-tax profit margins improved by 10% year over year. So after this high volume close in a strong closing range, this kind of just traded sideways as the market chopped back and forth and closed very strong. Only up 0.5% on Friday, while the indexes were up 2.5% or 3%. So a little caution there. Maybe this needs more time, maybe a week to kind of pull back. Two areas that I'll be looking for is if we pull back into the HVC, the high volume close, that's 71.40, and respect that area, then that's a potential entry point with a stop loss under 70. Or if the market pulls in on Monday, then this pulls back into the $70 area. See how it gets supported at that area. So that's CALX. This next stock might not be for everyone. It's DICE Therapeutics, DICE. Biotech stocks have been extremely strong lately, 8th strongest group in the market, so A+ group strength rating. This one just broke out to new highs on the 11th of October, up 62% on 1,900% the average daily volume. But as the market kind of chopped around, this did pull back under 35 and under the 8-day EMA. Now we're starting to see this kind of curl up. Friday it attempted to break through 35 and it got over a little bit, 35.07. But that area is where I'll be looking as a potential entry point, 35.07 or above, with the stop loss, not kind of an intraday stop, looking at a 10-minute candle. I want to get as tight of a stop as possible, so slightly under this $34, $33.78 maybe, potential stop loss there with a breakout point of 35.07 for DICE. Sticking with the biotech theme, we have GILD. This one just had earnings on Friday, up 12 or nearly 13% on 255% the average daily volume. Nice closing range, 94th percentile there, which makes sense because the market closed very high in the range as well. You see this blue dot from MarketSmith signaling that this hit a relative strength new high, which is always a good thing to see. Two areas that I'll be watching for is the HVC, the high volume close area. That was 79.27. Or if we pull back in the market, how we respond to the $75 area, kind of sitting on top of the previous high of 74.12 for GILD. And to wrap up biotechs, I did want to put LABU on the watch list, and this is the 3 times leveraged ETF of XBI. Now you never want to do technical analysis on the leveraged ETF, you always want to do it on the underlying one. So let's take a look at XBI. You can see that this has had pockets of strength there during this bear market, but it kind of gets shut down at this 200-day once, twice, 3 times, close enough for 4. And now we're starting to press above that again. You have the 8 and 21 EMAs below current price and holding support around $80. Nice round number there. We did have a nice close on Friday, back over the 50-day and the 200-day moving average. And we had a move on above average volume on Wednesday, which is nice to see with a good closing range there. So with this, I'd be looking for a break over Wednesday's high, 84.24. That would get us above, again, the 50 and the 200-day moving average, and get us kind of putting in higher highs and higher lows, which is what we want to see. Now, I want to play LABU because it has more leverage into that position. But like you can see, this isn't a chart that we would just want to hold for a long period of time because those leveraged ETFs eventually will trickle down to 0. So do technical analysis on the underlying ETF, but swing trade the leveraged ETF, LABU. Next, we have MEDP. And for full disclosure, I do have a position in the stock already. Last week, this had earnings where earnings were up 59%, sales up 30%, after-tax profit margins improved by 17%, all year-over-year numbers. This jumped up 37.7% that day, closed in the basically the upper quarter of the daily range, and on 700% the average daily volume. So all good things with that HVC, the high volume close. As the market pressure relieved on Wednesday in the first half of the day, remember we gapped down on Wednesday morning, but then we had that kind of midday rally or early day rally before eventually selling off. This moved up into new highs when that market pressure was relieved. So that's a good sign, more buying. But then as the market pressure came back in, the market started selling off. And then on Thursday, the market sold off again. This did come back into a low of 209.34. Still held the low from that high volume close day, which is good to see. And then I bought on Friday as we came through 218.46. I got filled at like 218.80. So a couple areas to watch for is that HVC level. Does that get respected on Monday? 218.46 or 220 if the market continues to rip on Monday. We want to look at how whole numbers start to hold. So 220 or 218.46 there, the high volume close for MEDP. Next we have NTNX. I think I might have had this on the breakout watch list last week, but this is in computer software enterprises, 89th strongest group out of 197. So not super strong, not super weak. B- group strength rating there. B+ accumulation distribution, and because of the lack of fundamentals, this does have a lower composite rating, 66, but the individual relative strength rating of the stock is 96, and that's really my main focus. I like how this has already moved up 100% off the lows from 1344 all the way up to 2750. So as the market went and put in a lower low, this stock was putting in much higher lows, showing relative strength recently. You can see the blue line underneath the price here. That's the relative strength rating compared to the S&P 500, and that's been in a nice kind of stair-stepping uptrend there. So recently, we had another gap up 24% on 380% the average daily volume. Low of the day, $24.99, so right around that $25 area, buying support stepped in. And from there, we just basically traded sideways through a very volatile week last week. I would be looking for a break over Friday's high here. That would be $26.95, call it $27, because we have 2 days of price action where the highs basically stopped right at the same price, $27.59, and then $27.55. So about 2% from a potential entry point. We know sellers have stepped in. So I would want to try to get a lower entry point and then maybe sell a piece into this 27.50 area. From there, if it can continue on, then we can move our stop loss to break even or to the low of the day and have better asymmetrical risk reward. So looking for a break over $27 and then just kind of keeping track of what happens at this 27.60 area for NTNX. Next we have PAYO, Pioneer Global. This is in finance credit card, which that group is ranked 149 out of 197. Very weak right now, but we're starting to see stocks within the group show relative strength. FOUR comes to mind, but this is stronger than that, so wanted to put this on the watch list compared to that. This does have earnings in 10 days, so if that's too close for you, just skip to the next part of the video. But this is one where we had this nice move from 550 up into new recent highs around 770. From there, we did pull back, and the low of this pullback got supported at this previous resistance area at 693. Undercut the 21 EMA, but eventually closed very high in the daily range, kind of because the market breadth was improving that day. Similar action on Friday, little shakeout under the 8-day, and then closed right near the high of the day. Actually closed on the high of the day. That's kind of impressive. So with this, looking to see how it holds the 750 area if we pull back again in the market. Otherwise, taking out Friday's high, 770, especially if we open lower on Monday, then take out that area. That's exactly where you would want to see some buying support come in. So 770 potential area to watch, but also earnings in 10 days. Again, if that's too close for you, there's more setups. Next, we have the strongest semiconductor stock, PI. This had earnings last Thursday actually, where the price was up 29% on 620% the average daily volume. And this actually closed in the 95th percentile of the range on Thursday. And remember, if we look at the price action on Thursday in the market, the NASDAQ was down pretty heavy on Thursday. So the fact that this tech stock closed very high in the daily range was a great sign. And then as the big cap stocks soaked up the money on Friday, this did pull back about 6% to 109 area. But later on in the day, buying support came back in, and we closed up 0.8%. which is great action. Again, above average volume in this move. I talked about earnings. That was up 950% year over year. Sales up 51%. After-tax profit margins up 13%. One thing that concerned me a little bit was how deep this cup was from 94 down to 40. But we also had a deep kind of handle here from 99 down to 73. But now that we have price action above all of those areas, again, looking to like a monthly chart, we are at all-time highs. This tech stock is at all-time highs while the NASDAQ is still kind of chopping around by the lows. That's great relative strength and something that you want to keep on a watch list. Got 2 more stocks for you. This next one is Wingstop, W-I-N-G. This is in retail restaurants, which is the 31st strongest group out of 197. Earnings per share rating at 94, so very strong fundamentals in this stock. B+ accumulation distribution, 95 composite, 95 individual relative strength. This stock had earnings last week, so that is behind us, where earnings were up 55%, sales up 41%, after-tax profit margins improved by 15% year over year. Because of that, the price was up 15% on 400% the average daily volume, and the market was selling off through this day, but we still closed in the upper half of the daily range, which is nice to see. From there, we did undercut the HVC, the high volume close area, both on Thursday and Friday, but price eventually closed above both of that area, above that area. So what we want to see on market weakness is, does the trend kind of change here and we actually get buying support at the HVC level of 158.39? Or does this need more time because it's more of a retail restaurant? Kind of slow moving stock. Typically that group is slower moving. So does this need about a week to kind of put in a flag here before breaking out? We'll see, but one to monitor, W-I-N-G. And the last stock that we'll cover is XMTR. This does have earnings in 11 days. So again, if that's too close for you, then just skip it. But this is an IPO stock that I've been watching. Really like how it's already moved up 100% off the lows from $22.60 up to $64 here. From there, we did pull back, undercutting the 50-day moving average, but quickly reclaiming that along with the 8 and the 21 EMAs. Rallied up through 60, and then we've kind of pulled back in this area. So Friday, we closed right at $60. I want to see either if the market sells off Monday, Tuesday, if we hold the low from Monday as potential support along with that 8-day EMA. And then if that's the case, looking for $60 as a potential entry point, or just a break over Friday's high, 60.73 for XMTR. And that's gonna be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. A big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the stocks, make sure you give them a try using the link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. On Twitter, I'm at Nick Drendel, but on everything else, I'm at Nick_Drendel. Have a great week, and I'll see you guys in the next video.